listening to Houston Real Estate Radio. I'm your host, Shanna Register, and every week we bring you news and information you can use on your next real estate transaction. And hopefully you've got a real estate transaction going because it is a hot market. If you are looking to sell right now, it is the time to sell. I don't know that there's ever been a better time to sell your house than right now today. Houses are just flying off the market so fast we can hardly get them in MLS. So it's a great market for sellers, and buyers are still at decent interest rates and able to get qualified and purchase, and when they can find the home that they want, it's a great time to buy. So really an interesting market. I've got Robert Dink on the line with me. He called in. He is from Washington, D.C. He's a senior economist at the National Association of Home Builders. So we're going to be talking about some of the things going on with home building right now, and it really is a hot market. So want to talk about that because there's just nowhere to go but up, and it's so exciting, right, Robert?
Oh, yes. The housing recovery nationally is doing pretty well. It took some time to get here, but 2012 and 2013 have been very good years. We made some progress. That's nationally. Texas has done even better than that. So it's a good time to be a home buyer or a home builder in Texas.
Yeah, absolutely. And it's funny that we're talking to you this weekend in Europe in D.C. because even our realtors from our company are up there in D.C. right now for the big conferences with WCR and National. So it's an exciting time right now. Y'all got a lot going on in D.C.
It's always a good time to be in D.C. There's always a lot going on.
All right. So, what's your outlook for the rest of the year? Is it just going to keep getting better and better for sellers and for home builders?
It's absolutely going to just keep getting better. I say it took some time to get here. Backing up a little bit, the housing boom really peaked in 2005 or 6, depending on where you want to cut it.
Right.
We hit bottom in 2009, early 2009. 2009, 10, and 11 were pretty rough. We just really spent those years bouncing along the bottom. But in 2012 and 2013, we managed to really put something together and dig ourselves out of the hole. Let me just say that from the peak in 2005 nationally, we fell by about 75% to about 350,000 single-family housing starts. We've turned that around. We've almost doubled that to over 600. So that's doing pretty good.
Yeah,
and that's
great.
Mostly happened in 2012 and 2013. And in comparison, the Texas market fell by about the same amount, peaked at about 185,000 starts, and hit bottom at about 55. But rather than climbing halfway back, I said we went from about 350 to a little over 600 nationally. The Texas market has moved from 55 to almost 100,000 starts. So while the national recovery is about halfway back, the Texas market is really about two-thirds of the way back. We think that 150,000 single-family starts is a pretty healthy market there, and we think they're about two-thirds, or the latest numbers show that that market is about two-thirds back to normal.
Well, and don't you think it would be even higher than that if you could find the land? Because the high concentration of areas where people are looking to buy, they're running out of lots. So, being able to find the land to build on, I think there would be more housing starts in Texas right now if the land was available and ready to build on. Do you agree with that?
I certainly agree with that. I think that land is in short supply everywhere. That's something that we hear from our builders, that one of the things I guess people don't necessarily recognize is that home building is basically a pipeline. It starts with land development.
Yeah.
Which doesn't happen overnight, and then it turns into developed lots that go for sale, and home builders buy the lots and build the houses, and the construction of a house can take 6 months. So it really takes a while from start to finish, and the idea that we had such a painful 5-year housing drought, a lot of that infrastructure, a lot of that pipeline has dried up.
Yeah.
As we come back into the recovery, we really need to restock those shelves, refill that pipeline, get things moving again at every stage of the process.
And now land values have really started to go up. So now, don't you think, even as that land becomes available, the developers who've been working to develop that land to be able to build houses on it, that land is continuing to get more value. But don't you think the prices of the houses that they put on that land is going to even keep rising?
That's right. It's supply and demand as we sort of move up from very low levels of supply to higher and higher levels of supply. We'll see some ease in the price increases, but the prices will continue to go up. There's just a lot more demand out there than there is supply, and that's a formula for rising prices.
And I know here in Texas, oil plays a big part in that. But let's talk about some of the other states that are doing well right now. Who's coming in behind Texas?
Energy states are really the ones that are doing the best these days. I apologize in advance to Texas, but North Dakota, in terms of percentages, is leading the country. They're going crazy with their energy boom, ahead of Texas, but they're the only ones. But we've also got Oklahoma, Wyoming, Montana, and Louisiana, all very strong energy economies. Those are really the housing markets that are leading the pack in terms of the national race to the top, or back to normal anyway. What
do you think is going to happen with interest rates? Do you think we're going to stay where we are? Or you think they're going to continue to head up?
I think that what we've seen with interest rates are that they really hit bottom at the 30-year fixed mortgage rate, hit bottom at about 3.5% in the middle of last summer when the Fed started talking about ending their quantitative easing program. The markets got spooked, and rates in a very short period jumped up to 4.5%. That got everybody a little scared, talking about whether or not this sharp rise in interest rates was really going to put a dent or derail the housing recovery.
Yeah, I don't think it's going to. I don't think it's going to have any impact on it. What about you?
I don't think we have anything to fear. Rates have come down by about a quarter point since that scare, and I think what's most important to recognize here is 3.5 was historic low. 4.5 and 4.25 are still really pretty advantageous rates.
Low.
The way to recognize that is that in the 1990s, the 30-year fixed was about 8%. In the 2000s, the 30-year fixed was about 6%. So at 4.5, 4.25, we're still doing very well. And we expect these rates to hover at this level for the rest of the year and move up only slowly as two things happen: as the Fed winds down its stimulus program later this fall, and as the economy picks up, we expect to see some upward pressure on interest rates. That's just a natural, healthy rate, a healthy process. That's what to expect, and we'll see the interest rates rise. But again, the most important thing to recognize is that we're going from abnormally low to something more like normal.
Yeah.
The 80s, the 90s, and the 2000s, we had much higher rates, and we still managed to start over 1.2 million single-family housing starts during that time. So I don't think that the rates are really a significant impediment to the housing recovery at all. Not this year and not next year.
And real quickly, tell us what you think is affecting small builders differently from big builders. Is it the construction cost? What do you see?
Actually, it's the availability of lots. As you mentioned earlier, one of the big differences between big builders and small builders is deep pockets. When the development dried up and lots were hard to come by, and then things started to recover, what we really saw was that the big builders had money in their pockets and were able to scoop up lots, the available lots, at deep discount prices.
Yeah.
The smaller builders, on the other hand, they were struggling to stay alive. Didn't have a lot of money lying around to buy any lots.
Right.
Now that everybody's doing better, the money's coming back, things are getting better.
Makes sense.
But the big builders have all the land, and the small builders are struggling.
All right, thanks so much, Robert Dink. He is the senior economist at the National Association of Home Builders out there in Washington, D.C. Appreciate the work that you're doing up there. And if you guys at home have a real estate question, you can call us, 281-882-8088. We'll be happy to answer your real estate questions right here on Houston Real Estate Radio. You can call in 24/7 anytime and leave your real estate question. And if if you missed any of today's show, catch us online at HoustonRealEstateRadio.com, where we post the videos of our show, so you can always catch up with anything you missed on the show. And join us next week at 11 a.m. on Sunday. We're here every weekend between 11 and noon. And if you've got a question, you can also send it to us via Twitter, #HRER. See you next week.